Hello, everyone. This is Amrit Kumar, Chief Operating Officer of AltLayer. Welcome to a new episode of AltLayer, where we discuss layer ones, rollups, app chains, and other blockchain infrastructures. Today, I'm delighted to have Anand Iyer. Anand is the managing partner of an early stage blockchain infrastructure fund called Canonical Crypto, and he's also a venture partner at Lightspeed. Hello, Anand. How are you?
Hey, Amrit, I'm well. How are you?
Not too bad, not too bad. Well, welcome to you all of you, and thank you very much for joining me.
Of course.
Let's start with a quick introduction for those who may not know you. Please tell us a bit about your background, how you came to be at Lightspeed, and what brought you to the crypto land.
Yeah. Well, I'll try to condense it because the background's kind of long. But yeah, I was just reflecting the other day that I'm kind of hitting year 23 in sort of like my professional domain as an operator, as ex-founder. But yeah, briefly, I'll kind of run through it. Back in 2001, I graduated a degree in Comp E from Purdue. Started my career as a developer, building very low-level sort of embedded systems protocols into this operating system known as iOS, not the iOS that we're familiar with today, but the one that goes into Cisco routers and switches. So that's kind of how I started my career. But then, started to move up stack. I ended up leading developer platforms at Microsoft for a while. So very close to sort of the world of developers. I've always kind of, this is my comfort zone. It's where I grew up. The second chapter of my career, the second decade, was mostly focused on starting companies and being a CEO. But somewhere along the way in 2013, I got introduced to Bitcoin through a very close friend of mine, and we started mining Bitcoin. It was sort of the first exposure, but it felt sort of like there was a lot of novelty on starting to mine Bitcoin out of the gate. But then, the novelty sort of wore off because, it was kind of an autopilot plateau. The rate of learning wasn't really there per se. It was sort of like mini optimizations here or there. But so I think I kind of fell off the crypto bandwagon for a while. I heard about Cosmos coming up and then Ethereum. And then finally with smart contracts, programmability, that made a lot more sense to me because just having grown up in that world, I was like, okay, this computes now. And so, my wife and I made an investment early on in this company called Stacks, which was, sort of like bringing programmability to Bitcoin. Because again, I was like, okay, I know Bitcoin, I get programmability. This makes perfect sense. So that was sort of like, I'd say where the rubber started to meet the road as far as like crypto exposure, investing in companies, et cetera. Our company, we exited in 2018. And then at that point, I decided to go deeper into crypto because I always had this thread, never really explored it as much. Started building a few things here and there, and then started teaching a class on DeFi, and eventually decided that I think I want to support a lot of early stage founders, having been one myself, having been through the journey, having been a developer, product person, etc. So that's how Canonical was born. And along the way, I met Lightspeed, who've been an incredible partner to me. And yeah, so I have this role where I do really early stage investments at Canonical, and can participate and invest in later stage companies at a Lightspeed. And yeah, that's the makeup, and that's kind of what brings me here.
In terms of stack, you mentioned you moved from down to top as well. So in terms of stack today,
Yeah,
of course, even crypto, you have infrastructure, but then you also have, you mentioned about
yeah,
DeFi applications. What part
yeah.
of the stack interests you the most?
Yeah, I'd say like the lowest layers are still very interesting to me, and everything from like layer ones on up to middleware, or even sort of orthogonal or tangential services to the stack itself. So they may not live in the blockchain sandwich, so to speak, but they live in the periphery. Companies like invest in a company called Sentier, for example, which is like a monitoring and observability service, which isn't really running on chain, but is harnessing on chain data to provide insights into what's happening on chain. So I'd say that where I've been honing in my thesis is to really support companies that are basically selling to developers. I feel like that's where the developer is the end user or the customer. I feel like that's where I'd like to get involved. The second is also I feel like the further down the stack you go, I think maybe in the crypto world this is sort of defying this thesis that I think the further down the stack you go, the more defensible your offering can get. Although like that's been I think we're seeing a lot of very interesting good teams build products that even though they may be very technically complex in nature, which in sort of like in the non-web3 world, like that's typically been challenging to do, right? Or like you have one incumbent sort of platform, like the implementation of TCP/IP, for example, is like a foregone conclusion. But that's different in the world of crypto. So yeah, but that's so short answer to your question is that that's typically where I tend to focus is lower down the stack. infrastructure or where the end user is a developer, that's where I get most excited.
Got it. Let's talk a little about the investment space. And of
Yeah,
course, there have been very, I would say, Lightspeed, for example, is one of the new entrants, I suppose, in the crypto investment space. I'm not sure when exactly Lightspeed started investing in the crypto. But could you tell us, how and
yeah,
when a VC firm decides to invest in a new space like crypto? It could be, and now,
yeah,
of course, AI is a big thing. Of course, it was big
yeah,
for quite a while, but now it's becoming even
yeah.
hotter. But what is the
Right.
cusp? At what point a VC firm decides, okay, now this is something that we can't we
Yeah.
can't we can't ignore?
Yeah, that's a really good question. The one, quick point is that Lightspeed's actually been investing in crypto for about a decade now, and it's been
Okay.
sort of under the radar. It's like surprising, but they've got some investments that date way back. And the earliest days they've been sort of active in this space. So I think it's been an ongoing theme. And even if you talk to Ravi Matre, who's one of the founding partners of the firm, uh, he's just a fascinating person who's always had just been able to read the tea leaves and see what's coming up ahead and ensure that the firm is looking at opportunities that again, the question really is like, what does it look like to live in the future, and like what becomes steady state in the future, and how do we help accelerate companies who are helping us get to that point? So kind of using that vantage point, I think the firm has always had a leg up and thinking about like, hey, let's support these initiatives. And in all honesty, some of these may not be the right thing for now, but we should start thinking about these. So, and to answer like your other question about like how does a firm start thinking about some of these things, yeah, we look at these in forms of I think as one of as Bejol, who's also one of the leading partners of the firm, has mentioned, which is we think about them in sort of S curves, right? So you kind of want to time these and think about like, okay, these, for example, something may be looking interesting right now, and or the technology is fascinating, but what are some of the things that we need to see to make sure that this becomes mainstream or becomes interesting, right? So great examples like AI you brought up, right? So I'm sure with you or me, like I remember AI is not new. I took an AI class in school in 1999, right? Like it was a long time ago, and I used Lisp to like pretend like I knew what I was doing with AI. That was my only exposure to AI, but I think it took this amount of time for us to get to this point that we needed the proliferation of data on the internet to then train models and then get to a end user product like ChatGPT to be like, whoa, this is now happening, right? Like everything we talked about, you know. And similarly, so I think we need to have certain catalysts or tailwinds for technology to become interesting. And so I'd say a few things kind of need to come together. And I think for a firm like Lightspeed to get excited, it really is about the novelty of the technology and how it sort of um, accelerates or how that technology component helps us become more efficient or becomes just proliferates and helps us in our day-to-day life. And just sort of reading that, number one, but also second, looking at what the right timing for this needs to be is another thing that's an interesting or like looking at catalysts. And those could be anything, right? It could be just technology innovation, timing, regulation. Any one of these things could be catalysts for that. And yeah, just also like I think we just need to have depth and understanding in the space, right? So it's not like, hey, by the way, this is fascinating, let's go invest in that area. Like I don't think that's quite good enough, right? Like we need to have people who can be good thought partners and supporters for the CEOs and founders who are going to be building things in the space. So building up our internal acumen and know-how, and also the vernacular to make sure that we can support these companies really well. So those are some of the things that need to come together. So yeah, we start to build conviction. We talk about this within, and I'm very fortunate to be sort of in the mix when they talk about these things at Lightspeed and get a feel for how someone like Ravi, who's been doing this for over 2 decades, thinks about this, and how the brass tacks when it comes together to from like Lightspeed, like, hey, we need to. It's not about like building conviction here. This is going to happen. Let's go out and make sure that we're ready to support founders when they're building this space. So yeah, it's you're right. Like there's a big concerted effort and focus on AI, which I think is incredible, and it's going to be such an amazing accelerant for so many things. Also scary, but yeah, I think we're generally excited.
It's a good scary thing. It's something that
I
people are
agree.
excited about. Indeed.
I agree. I agree.
Talking
Yeah.
about Web3 itself. So could you? I mean, of course, you started a long time back, but could you tell a little bit more about your Web three thesis, and has it evolved over time? Do you feel like, okay, what you believed in, I don't know, 5, 6 years
Yeah,
ago is very different today, and your thesis moving forward is
yeah,
probably different from what you had in mind, let's say 5, 6 years ago?
yeah. Um, the one, I think, and I shared this with you earlier, right? Which is the focus on infrastructure, the focus on developers, and getting more tooling for developers in the ecosystem is like continues to be sort of an area of focus. And I think when you look at the report that Electric Capital publishes, right, which talks
Yeah.
about the number of active developers in this space, I think we're still several orders of magnitude behind. If you look at sort of the non-Web3 space, I think it's like what, I don't know, somewhere between 25 and 30 million developers or something like that. And if you look at our space, it's like in the tens of thousands of developers, right, that know how to code or build things in the world of crypto. And that's across the stack, right? So I think we have a long ways to catch up. So I continue to think about what do we need, and not just from like an educational standpoint, because that is necessary as well, but also from a tooling standpoint to help accelerate the just the growth and proliferation of developers in our ecosystem. So that's like the high level thesis. I really love that world, and I continue to believe that getting more developers into this space is what's going to help us move forward, to help move crypto in general move forward. Because I think the fundamentals of what the blockchain has to offer are pretty sound. And I think we sometimes, the outside narrative, I think it's a little bit confusing, because sometimes there's this confusion around crypto prices, crypto assets and pricing versus underlying technology, right? There's a big disconnect there when it comes to people who are not in the know like you and me are. So, but I think getting more developers here to support other developers coming on board, building foundational use cases for the blockchain are going to be really interesting as we look forward, because I think we've got we go through cycles and phases, right, of infrastructure. So let me zoom out for a second. And I think there's maybe Union Square Ventures that have done a really good job of documenting this, which is, there was Bitcoin itself, right, as a white paper, and then there was BTC, right, which was the token, right. So there's like the infrastructure piece and the actual like consumer piece, right. And then we've gone through sort of waves of this over time. We've got infrastructure applications, and I think we've got a lot of infrastructure that's been built. And so, yeah, I think that's, long story short, like I focus on sort of like the bottom layers. That's continues to be the thesis. The only outlier, and you touched upon this earlier, tends to be DeFi for me, because although I don't have a finance background by any stretch, my sort of concerted view when I came into this, like it was very top down, and it happened to be through DeFi. And I was just fascinated by this, because it started to challenge a lot of assumptions we have around traditional finance today, right? Like how you and I operate. If I wanted to send you money, like, the things that we have all taken for granted, yet we still do in the traditional finance world, just got completely, disarmed and like turned on its head thanks to decentralized finance. And I think it is of all the product suites we've seen today, DeFi, NFTs, gaming, social, and maybe NFT is pretty far ahead. I think DeFi to me has shown product market fit, although albeit it's been with a group of people, a group of degens like you and me, like us. But I think it's shown that it works, right? So for us to then like cross the chasm and make it more mainstream, there needs to be some tailwinds that need to come into play. So yeah, I'd say DeFi infrastructure are the thesis. It hasn't changed too much. And this is my last point, and I promise I'll stop rambling about this specific question, which is, with the sort of incidents that have happened over the last year, whether it's FTX or other things, the question always comes up, or like, are you changing anything? Like, what's going to change, right? And for me personally, like nothing has changed dramatically, because the technology is still sound. There were bad actors in this space who misused the way the platforms should be run, and obviously used custom deposit in malicious ways, in like one specific instance. But aside from that, yeah, it's not a situation where dramatically suddenly the focus for what the blockchain is changing, right? Or like suddenly like, hey, like there's a new movement here, let's kind of latch onto that. Like that's not the goal. So yeah, I'd say largely it's been the same, and it's going to stay central looking forward. And if anything, I'm personally quite excited about some of the use cases that I'm seeing now that I hadn't seen before that are actually being catalyzed by things like AI. So yeah, that's what keeps me jazzed and excited.
And, you mentioned electric capital, and for those who don't know, they publish annual reports on developer activity across different chains. So, by the way, entire blockchain
Yeah.
space in general. And one interesting, I think, point that they found in the last report that they published was that new wallets. I mean, it depends on how you define it, but the wallet that did first transaction, basically, if you had a fresh wallet, and if you look at the history of that wallet, the first transaction that wallet did was, in most cases, was actually NFT transaction as opposed to DeFi
Yeah.
transaction. Right?
Yeah.
Were you surprised by this result? Or you feel like that's actually normal? What's the sort of surprise?
I'm not surprised. Yeah, I'm not surprised at all. Like, I think it makes, I think if you look at the, I mean, there's so many ways to unpack this, right? So I was riffing with another investor the other day that I think if you look at the trend lines and what has been a big catalyst for crypto over the last few years, right? Let's say like between the 2019 to 2022 era, that vintage, but the catalysts were really like it started with DeFi in a lot of ways, but there was also the NFT movement really picked up in a huge way, and it became a form of again, just like as humans, right? Like, and for those especially who are looking at assets or looking at artwork in a speculative way, and people who appreciate that, this is like a natural entry point for them, right? So I'm not surprised at all. Like that's the case. It's actually a little bit more, perhaps less nuanced and easier to grok than something like DeFi because I mean, let's be honest, right? I think for the average user, an interface like OpenSea is a little bit more acceptable than something like I don't know, Curve, right? So I'd say that it's just more reasonable, and that doesn't mean that like the buck stops there. Like you may start there, and if you're sophisticated and you feel like you want to take some more risk or want to learn a little bit more, then you enter the world of DeFi. But yeah, it just depends on appetite, right? So and sort of where again you feel most comfortable. So not surprised at all. And I hope that trend actually kind of continues because you start to NFTs again, like to us, we think of NFTs, we think of artwork, but like that doesn't have to be where the buck stops, right? There could be other form of non-fungibles that get introduced on chain. And I think there's a ways to go before we get there, but that could be an interesting way in which people still get on board into the world of crypto, but may not even know, that they're doing so, which I hope is where we end up in a sort of steady state format.
I have one more question on sort of VCs and that landscape and how VCs kind of see projects in the crypto space. And I've spoken to some of them, and it feels like there's probably a different way in which crypto native VCs operate, and there's a different way in which, let's say, traditional VCs operate. And by what I mean is traditional VCs who are actually investing in crypto as well. So not like those who want to stay away from crypto. From your perspective, do you feel like they actually do operate differently? And the other question would be that around valuations, do you feel like the valuations that a valuation that let's say a traditional VC fund would give a crypto project would be very different from valuation that let's say a crypto native project VC would give? Do you feel the difference from where you stand?
Yeah. On the first one, like in terms of how we think about deals, I think it really comes down to one thing, right, which is focus, right? So when you enter a space like this, which is so nuanced and there's so much depth, right? Like in tip of the iceberg from outside in, like as we talked about, looking at crypto assets and pricing, right, as one, or people look at NFTs, maybe some subsection have heard of those. I'd say DeFi maybe a distant third in terms of like just general awareness of what crypto has to offer. But underneath this is like this giant like iceberg underneath of like beautiful tech, right? So it makes a ton of sense for there to be focus. And I think a lot of the crypto native funds bring by just being able to focus and eliminating all the other noise noise is not the right word, but like everything else is happening in this world, they're just able to go deep, right? So I think that's what a crypto native fund can bring. So I think when a movement like this begins, I think the investment in going into starting a fund that's heavily focused makes a ton of sense. I think that's the difference. I think larger platforms like a Lightspeed, we can have multiple focus areas because of the size and the AUM. And so we can have crypto focus, we can have a healthcare focus, we can have an enterprise AI focus, it's consumer focus, et cetera. But if you're a smaller fund just getting started with, whatever the fund size might be, and you want to be hyper focused here, that makes a ton of sense. And you can, as time goes on and as you show signs of success and you raise more capital and you continue to double down because the depth of what you want to see here starts to grow and your conviction starts to grow as well. So that's the primary sort of difference I'd say. In terms of valuation, that's a tough one for me. Like I don't see a discrepancy here per se. I'd say that we all sort of collectively work together on understanding like, hey, where do things need to be at this point in time in the market, and I'd say maybe the one nuance is that when it comes to a multi-stage, multidisciplinary fund, you're sort of weighing an opportunity to invest in this specific company at a specific valuation compared to some other companies and other valuations, right? So like you may be looking at this versus maybe an investment in AI, and how do you sort of like, how do you gauge or how do you compare the two? And every fund operates differently. Some funds have like specific focus areas, but like that sort of like thought process doesn't need to come in to compare one opportunity in crypto versus another one in another subsector. But when you're a crypto native fund, that's all you're looking at, right? Like you're not comparing it to anything else that's happening in the market. So, across the board, there is a general calibration that tends to happen. So I don't think this is necessarily something that's, that needs to happen in like a crypto native versus, a more broader fund, so to speak. But that's been my experience in the time that I've been investing, is that, yeah, I think we tend to sort of calibrate in lockstep. There doesn't tend to be any nuance when it comes to sort of a broader fund versus a native fund, so to speak.
Got it. Okay, let's move a little bit away from now investments and sort of focus more on the infra side of things. And let's start with a kind of controversial or edgy question. And so basically, I think Vitalik put out a blog post talking about the end game for Ethereum, which is around scalability and how Ethereum would actually scale. And he kind of positioned the whole thing as, ZK rollups are basically the end game. So you'd have ZK rollups that could be as an L2 form, or it could be L3s and whatnot, and you would scale the underlying Ethereum using by pushing execution off the chain. Mm-hmm. And so the first question would be, do you believe ZK rollups are the end game of chain infra? Because, some of the L1s out there, I won't name them, but basically they would say, look, we have a very competing platform. And so what's your perspective on this, first of all? Do you feel like ZKs are indeed the end game, or even alternate layer ones actually have a place of their own?
Yeah, I'd say that. So I'd say rollups in general have shown promise, right? Like I think we've gotten to that point now. If you look at sort of where we are today compared to where we were about a year ago, I'd say the progress has been sort of immense, right? Like we wanted to get to this point with Arbitrum, with Optimism out there, a few ZK EVMs now also coming to life. So it feels like a very good spot in terms of just roll-up technology. I think obviously one roll-up technology, an optimistic versus ZK, and I think we made that progress. Obviously, super impressed with how the Arbitrum team has been just executing, and full transparency. They're Lightspeed portfolio companies. We've been a little bit more close to them, and very impressed with sort of like how they've hit all the milestones that they'd promised to hit over time, and just general understanding of what the community needs. So it's been interesting to watch that. So I think specifically to answer your question, is it ZK rollups in the end state? I'd say there's a few more things that we need to see to get there. And I think today we're starting to see these come to life. I think everything from the hardware stack to the software layer, I think we're starting to see a lot more things that need to come together for that to happen. But I think it is happening. Whether it's Scroll, whether it's Polygon, ZK EVM, I think we're kind of trending in that direction. So I think the short answer is like, I think the rollups are end state. I don't know if it's ZK or not, because I think we're starting to see that, Arbitrum is just like doing an incredible job, and would love to see progress happen there. And so much of Ethereum or even layer twos like Arbitrum, there's like network effects really dictate where the pendulum sort of swings and settles, right? So you talked about like alternate L1s. And you also asked earlier, like, hey, what are the trends, or what are some things you've seen? And we have seen this over the years, which is, I think it is definitely exciting um, when you have an L1 that's like, hey, we're going to solve for the trilemma in an elegant way by doing these things, and there may be some other compromises along the way, but here's how we'll get there. But I think we've just seen that. uh, let me put it this way. I think in 10 years, if you and I were to be having this chat, we'll still be talking about Ethereum, and we'll be talking about, you know, uh, settlement maybe happening down at L1 at that point. But will we be? I struggle to think about like what that means in the context of another L1 at that point in time. So that's a tough one for me to answer, because I think just having learned lessons over the last 5 6 years, I think you start to see that, just because of network effects, the comfort zone kind of brings us back into Ethereum, and we're happy with with what that offers to developers. Now, that being said, there are some novel things being built in other L1s, right? So I think it'd be great to learn from them and try to figure out like how, and for example, like specifically the programmability model, right? Like bringing like the move like framework. I think that's really novel. And the way I think about it is that it sort of reduces the surface area for things to go wrong. Whereas I think, maybe the analog, like I use in my head as a sort of old school programmer, is that I remember, the only way you could have built an iOS app back in the day was using Swift, right? And then, I'm sorry, using Objective-C, and then you had, I almost said Objective-C, and then you had like something like Swift come along, which was, a lot more tenable for and acceptable by developers. And so I think we're going to see progressions like that, which could draw developer mindshare, and could have an interesting. And then you have to marry that with go to market. But I'd say the comfort zone is very strong today when it comes to Ethereum and roll up technology at large. So yeah, it's a wait and watch kind of situation.
At least the good thing about this roll up is not just about the roll up itself, but also that you're moving execution out of the chain, right, of the main chain. And now, since you mentioned move, now you can have an execution layer that actually runs move as its VM, move VM, and then
Yeah, that's true.
you can have a
Yeah,
sovereign chain attached to Ethereum. So you post data back on Ethereum, but you still have a VM that is move. So you could still process transactions,
exactly.
and it's, could still be attached to Ethereum in many ways.
Yeah, I completely agree with you. I think that's a great point, and I think we've seen some examples of this with other frameworks as well. I think Move is definitely an interesting one that's like definitely catered to what we want to see on a blockchain, right? So yeah, that'll be fascinating.
And by the way, last time we spoke, I think it was a couple of months ago, or probably more than that. We
Yeah.
spoke and we discussed about app chains, and I think around the same time you also tweeted, if I remember correctly, that app chains will be inevitable for most apps.
Yeah.
What is your thesis on app chains in general? And the follow-up question would be, how does that thesis differ from app rollups?
Yeah. Yeah. I uh, I think the progression that we will likely see is, and again, I'll use sort of an old school analog, and sort of like this is how I at least like think about things in my head, because we've seen this progression over the years, right? So um, creating a smart contract and deploying it on a layer one or a layer two today feels like what you might do with a proof of concept on Heroku, right? You kind of get up and running, and the barrier for entry is actually very, very low. And yeah, you can test such a hypothesis very quickly and see, all right, am I trending in the right direction? As your product starts to get bigger, your protocol starts to get bigger, and we've seen some of these start to kind of push the limits, right? Like some of these protocols are like, yeah, every basis point matters. And maybe, and like this was a story or a narrative like last year, like gas fees are too expensive, so we need better scaling solutions. If not, like we'll plateau where we are. This is like untenable for us to perform certain transactions on chain. So we need to think about what comes next, right? So is it another L1? There's no L2s around today, right? That was the narrative about a year ago. But again, going back to the progression, you have something like, I want to deploy something and test on Heroku. Heroku becomes unsustainable, untenable at some point. You migrate off and you use something like, EC2. And at some point you get so big, right? Like, and there's some outliers here. It's not for everyone, but then you're like, hey, I need to manage my own data center, right? Like that's kind of the progression that tends to happen. So I think we're kind of seeing similar things. You start off on an L1 and you're like, wait a second, like I need to go to an L2 for various reasons, for scalability reasons. And then the end game might be that like, hey, I'm just so big right now that everything here matters to me, right? Like every single basis point matters to me, and I need to spin up. I need to think about an app chain here. I mean, obviously, like I think DYDX is probably the leading example of this, and maybe there may be more to come. And again, there's trade-offs here, right? Like I think when you get as big as a DYDX, you know, of using something like Tendermint Cosmos, like what you need to think about how you spin up your own marketplace of validators, et cetera. Like it's a lot of work. It's not for the faint of heart. So in that sense, I think roll-up technology makes a little bit more sense because you get sort of like that bootstrap network out of the gate, which is a little bit harder to do when you're starting to use an app chain that is sort of customized or it needs to be customized for your purposes. So yeah, I'd say that it seems inevitable that protocols are going to get bigger because they will get bigger because there's going to be more traction. And as they start to get bigger, they're going to need every single one of these things are going to start to matter to them, like optimizing for what their sort of take rate is. And when that starts to happen, you still want the novelty of the blockchain without compromising decentralization, other sort of native things that the blockchain has to offer. And you just can't do that with at some point you'll hit a limit and you want to be able to spin up your own chain. So, and this I guess maybe a more crass analog is that like that's you want to start off by learning to swim in like the same pool that everyone else is swimming in, but at some point you're like I don't want to be swimming here, right? Like I think you want to sort of migrate off and you're a high performance swimmer, right? You want your own lane and you want to swim really fast. And how do you do that without everyone else crowding up the pool? So yeah, I think it feels like where we'll head, and we start to see some breakouts here. Maybe we'll see some more in the coming years. And I think that's where we'll roll up. No pun intended.
Talking about roll-ups and app chains as two different, I guess, infrastructure or technology.
Yeah.
Do you feel like there could be applications that are better off on a roll-up or better off an app chain, but not on roll-ups? Do you feel like there are certain types of applications that are well suited for one type of infrastructure and not for the other?
That's a good question. I'd say that depends on sort of like how much work the app sort of wants to underwrite and take on, and how much you want to leverage the technology of the underlying chain itself, right? So again, you look at something like Cosmos, Tendermint, or Substrate on one end of the spectrum, and then you look at what you can get with L3s on another ecosystem altogether. There's definitely trade-offs there, right? And honestly, like I think we've seen some success there, like with Osmosis or others, and I think it's a matter of time, like when we start to see some folks sort of leveraging what L3s have to offer. So I think yeah, it is truly a trade-off situation, right? Like what are you sort of optimizing for? How much bandwidth do you have? How much do you want to compromise, or how much do you want to forego when you look at one offering versus another? And I think I don't think folks are going to take that lightly. Like you'll have to do a lot of research and diligence to make sure that you're getting truly what you're expecting there.
Got it. I mean, one thing, again, I don't have a firm answer to this, but I always felt like this. The good thing about roll-ups is that at least you have an L1 to fall back to.
Yeah,
so there could be interesting application scenarios where, I don't know, you want to tap into L1 in some way, and it gives you that way to fold back in some way. While in case of app chains, you simply cannot do that unless, let's say, for example, the Cosmos Hub in some way allows some of these things, in the center. Again, I don't have a concrete example of what actually makes sense in an app chain world, in a roll-up world, which doesn't make sense in an app chain world. Anyway, you mentioned
that's a good point though. That is. I was just going to say, sorry, that like I think it's an important distinction, right? Like you're right. I mean, when you look at sort of like what you want to get codified on Ethereum as an L1, right? At the end of the day, because that's what you get with some of these L3s that we're starting to see proliferate now. Whereas not to say that any one of these other blockchains, because they are going to live forever and not dissipate, but yeah, I think you can really take advantage of an L1 like Ethereum if that's where things get settled. And again, when we talk about like where do you see this in 10 years, right? Like I think you have this a great degree of confidence that we'll still be talking about Ethereum in that point in time. And not to say that your own standalone chain is will not survive the test of time, but you have that comfort, like you said, which I think is an interesting point to consider. And it's something that folks should take into that rubric when you think about which direction you want to go in.
Indeed. You mentioned and you believe that most dApps that will become big enough, they would want to go their own route. And so in that world where some of the biggest dApps are actually sitting on their own chain or sitting on their own rollups, in that world, do you disagree with the fat protocol thesis that Union Square Ventures talked about many years ago? And what is your take on that in that world where some of these big dApps like DYDX, Uniswap, and let's say Aave, for example, move to their own chain or rollups?
I mean, I think this is a great question for them, right? Like, which is because I think when you think about where we were at that point in time when that was written, I think these concepts were somewhat novel, right? Like it was, the notion of an app-specific chain might have been a little premature to consider at that point in time, and so but the analog is not drastically dissimilar, right? Like you're still going to get the chain is kind of like the bottommost layer is going to accrue value. In this case, like the app and the chain are like exactly the same, right? So I think the stack and the way it's envisioned makes perfect sense. It's just that the chain in this case may not necessarily be Ethereum, right? Like it might be your own chain, which I think is again there's novelty associated with that, and it's a we also like I think that's one way to think about like I think the framework. But if I were to zoom on for a second, my sort of like I'm curious to hear your thoughts on this as well. But like my vision of this end state is wrong. Like the steady state is that we are, as let's say consumers or retail investors or gamers or NFT traders, we're interacting with a product, a protocol, an app, yet we are oblivious maybe, or like this notion of what's happening underneath is largely obfuscated from us, so I think the question really is like, I think bottoms up we care about like where these things lie, right? Is it Ethereum? Is it its own app chain? How does security work? How does interop work? All these things matter to us at that point. But I think where I'm hoping things will settle is that to the end user, this is largely obfuscated, right? Because today the user has to go through this mental model of like, wait a second, what is this protocol? Like, oh, it's on this other L1. I need to get a wallet for that L1. I don't even know how to get the native token for that specific L1. So I need to go get it from somewhere, transfer to this wallet. Like it's such a mess, right? So anyhow, I'm curious if you share that notion that at some point,
I mean, my feeling is that if
we
we do go in that world where some of the biggest dApps or the biggest dApps out there in the market, they have their own app chain or app rollup. In that model, I still feel like the infrastructure itself is actually a part of the app, even though it's not, you're not exposed to it directly, but at least it's part of the same stack in my perspective. So if value, because in most cases, let's say the app has a token, that token will be used for gas fees and things like that on the app chain itself,
That's right.
as well. So the value will still keep going on the, you can call it the because the same token is being used both at the application layer as well as the infrastructure layer. It kind of captures the same thing. It's kind of like one mashed up, fusioned, in stack rather than separate stacks. Right. From my view.
Yeah, it's a good way to look at it. Yeah.
And let's talk about a similar thesis that it's doing rounds in the last couple of months, which is around the fat wallet thesis, because people believe that now wallets have become, and people are not thinking about wallets that much 5-6 years ago, right? People are, wallets are just something that you simply cannot capture value at. It's something that which is completely free, open source, and it's very difficult. And that has changed. That has changed because now wallets have become entry points, and you can put in dexes and whatnot. You can integrate dexes and exchanges and whatnot. So you can create, integrate fiat on ramps, and you can actually capture a lot of value there. So what is your thoughts on that? So do you feel like wallets are going to be the big place to capture value for investors as well as users?
Yeah, it's a good question. I think there's a place for wallets where for retail activity, right? So, I mean, if I were to ask, I don't want to put you on the spot, and because I think you might be sharing something that's personal, but to me, I think within our community or like our group of builders or folks who are sort of in the know, we don't we don't use the DEX functionality that comes within a wallet because that's just, we for many different reasons, right? Level of customization or parameterization or slippage or, um, the fees that we may have to pay the wallet. We don't know exactly what's happening there, right? So we'll go to our DEX and we'll use the wallet to do that. Now, if you look at that exact same product, but in the hands of a retail investor or consumer, that's like, Coinbase is the quintessential example, right? I don't know it's a centralized exchange, but that's what it is, right? It's a wallet at the end of the day where you're trading assets, right? So I think there's definitely use case for that. I think the demographic is one that we need to kind of clearly discern, right? So I think that's the fat wallet that we see today. It's like overloaded with features and the ability to trade assets, stake, etc. Right? So all this functionality being provided.
The super app
When it
of some
comes to
sort.
yeah, the super app, that's exactly what it is, right? And I think there's a place for that, whether it's Rainbow, and I've seen a few other entrants in the space where they're like geographically focused as well, right? So they're trying to create the equivalent. And again, I think the angle is not that this is a centralized exchange, but this is a wallet for you where you can custody your assets, right? By the way, again, like this, the other layer of nuance here is that like, where the custodying is happening, right? Is it self-custodial or is it custody somewhere? So now, when it comes to being sort of the gateway for dApps, that's where I think, as like a browser extension primarily, right? I think that's a barrier for entry, and I feel like the direction will start to go in. I think thanks to account abstraction and other enhancements happening in the space, is that I think we'll start to see these embedded wallets start to appear and start to become a little bit more popular. And the idea that, because again, there's just barriers for entry here for the average user. Like, let's say again, steady state, we have games that are leveraging the blockchain for various different things. I just don't see a world in which we're expecting a user to download a browser extension first and then go through all the steps that we do today just to be able to play the game, right? So I think at steady state, we have these games that have wallets embedded in them. And where I see technology really playing a part is that I think the idea of a wallet doesn't really change, but they're really embedded in nature. Like Coinbase has released our wallet as a service. We have such providers out there today. I have a Canonical sort of portfolio company called Portal, where it's like MPC wallets as a service. And so I think these are going to start to become more mainstream over the course of time. I think it almost seems inevitable, because I think it's beautiful to see that, okay, we tested this hypothesis out and it really works as a browser extension that gives you an unlock into this application today. And that became like the most interesting application, is that browser extension, right? But I think slowly we're going to start to see these become more embedded because the applications themselves are more interesting, right? So to your point, I think we'll start to move away from browser extensions, because honestly, those are kind of scary in many ways for the average user to think about. And hopefully that'll also dissipate some of the security exploits and hacks and things like that we've seen over time as well.
By the way, since we last spoke, about rollups and app-specific rollups in particular, several companies, by the way, including Optimism, which launched Optimism SDK, Arbitrum recently announced Orbit, for example, and now you also have some of these higher-level abstractions on top of that people often call them now rollup as a service products. Eclipse and a bunch of them. By the way, Allplay is also building one of those. What are your thoughts on these RaaS offerings in particular? So rollup as a service offerings in particular, which are kind of like